Hello, ladies and gentlemen. My name is Greg McCloskey from ForexLive.com. Today's date is October 1st, heading into October 2nd trade day. We're going to have the main event, the next main event, which is going to be the ECB interest rate decision and Mario Draghi's press conference, going to take place at 7:45 and 8:30 a.m. Eastern Time, respectively, in tomorrow's trading. My comments to Mr. Draghi as he heads into this meeting and press conference is this: that I may be able to see you, but I wouldn't want to be you. And my reference is to the difficulty that he's going to have in communicating what the ECB can do and also what is happening within the EU economy. We know that the CPI for flash estimate for CPI this month came in at 0.3, well below the 2% target. We know that the unemployment remains high at 11.5%. We know that the PMI data for Germany fell below the 50 level for the first time in over a year. We know that the EU PMI came out weak. We know that the TLTR program, which is supposed to be a savior, was undersubscribed. We know that the asset-backed security market, which they talk about buying bonds and stimulating more or adding more liquidity into the market, is a limited market. We know that the government bonds in the foreign countries are already low, and so that should be stimulating growth, but it's not. We know that commodity prices are lower. Well, the only thing that we don't know is what may happen in the future. Is the stimulus enough? And that may be something that Mario Draghi talks about in trying to put whipped cream on you-know-what, that there is a lot of stimulus within the system that hasn't had the impact that it should just yet, including perhaps even a weaker euro. But what else could the EU do, or what else could the ECB do, except maybe promote even a lower euro going forward? Now, he doesn't normally talk to that, but he has the ability to perhaps keep that trend going to the downside. So we'll be listening to what he has to say, and kind of the market's going to be deciphering any sort of nuance that he has. But overall, I don't see much upside potential for the euro. If the euro does go higher, I think there's going to be lots of sellers in the market, happy to sell the euro at whatever level it can get to. But from a technical perspective, there are some levels that I'm going to be watching. Why? Because we still have to remember that we have to define our risk and limit our risk, because I don't want to sit here and watch the price go from 126.12 currently up to 127.40 and be out 140 pips or so on the trade and feel nervous, feel anxious, have all that fear that goes along with it, with the understanding that the non-farm payroll is the next day as well, and God knows what happens because going to happen through that. So I want to make sure that I control my risk and limit my risk. And where might I try to define my risk and control my risk and limit my risk? And I look at this weekly chart, and I look at the low from November of 2012, and I see the 126.60 level. Is that a level that we broke through this week? Yes, it was. Is that a level that is now, since we broke through that support, is now resistance? And the answer is yes, it is. And so the 126.60 level is going to be my line in the sand for tomorrow. As long as we stay below that level, the bias remains to the downside. If we move above it, maybe I square up. Maybe shorts. Maybe I just become neutral, because I'm not going to go out and buy it, to be honest with you. I'm going to look for places to sell, and it might be that it goes up to 75 and comes back down below the 60 level, and I sell it back through that 60 level. But I'm looking at this line right here and saying that's my big line tomorrow. That's the line that I think there's going to be the momentum to the upside or momentum to the downside, and I want to trade around that level. That's if the price goes up, okay? And again, I don't really expect it to go up, but if it goes up there, that's my line in the sand that I'm going to be paying attention to on the top side. Another key level on the top side, if it does go above the 126.60 level, and I have no position, is the 127.46 to 57 level. Those are the low prices going back to 2012. Keep those levels in mind should the market move higher. I think that they'd find lots of sellers near that level. All right, let's take a look at the hourly chart here, and you can see the importance of the 60 level right here. When the market fell through that 126.60 level yesterday, it was pretty fast and furious to the downside here, moved down to a low of 125.70. Today we're just consolidating with lots of green and red bars. It looks like Christmas holiday type of market here, with the holiday colors as well to show for it. We are trading at the 126.13 level. If we're going to go lower, we got to get below what? We have to get below this old trend line here. Perhaps that would be step number one, and then we have to get below the low as well for the day. Now this line right here represents 8:30 tomorrow morning. That's going to be where the hourly bar is at. So you can see that this trend line right here is already going to be below that level. So pay attention to it, and on the top side, by the way, the 100-hour moving average is on the top side as well, and that's probably going to be below the 126.60 level come 8:30. So it's probably going to be around the 50 to 55 level if I look at this and eyeball this correctly. Somewhere around here. Here is where that level is going to be, in between, right around there. It's probably going to be if you straight line it down through here. So that is going to be our key resistance on the top side. Again, we move above that level, I'm neutral, I'm square, I'm not doing anything. If we go up to it and hold that level, look for selling up there, folks. And on the downside, I think the best way to trade this off of the hourly chart at least is to look for levels that you don't want to see the price move above. So if we move below the 125.70 level, which is our low from yesterday, and move below this trend line right here, you don't want to see the price move back above the 125.70. As long as it stays below it, the bias remains to the downside. If we move back above it, maybe you'd be a little bit worried. If we move above this line, maybe you're worried. Then you throw out the 26.60 level. You start to use these levels as your resistance level. On the downside further, we have this other trend line which connects this low to this low. That level comes in at 124.86 at 8:30 tomorrow morning, or 87. So that would be a target on the downside. Can we get all the way down to that level at 8:30 tomorrow, or through his conference? Yeah, we can get down there. It's about 130, 140 pips. What is it? Let me see here. From this current level down to that line right there, it would be about 123 pips to the downside. We can have 123 pip trading range to the downside. Can we get down to the next trend line, which connects this low to that low right here? And if this is the high right here and we move down there, that would be about 150 pips. That too is in the realm of possibilities for the euro versus US dollar. So draw your lines. This connects this low to this low. It's also a parallel trend line to here, okay? And this is this line, it connects this low to that low right here. Just mark them in there. It'll give you some levels to lean against and to target if you are trading the euro versus US dollar. How far can we go in the euro if going forward? Off of the weekly chart here, we have this low right here, which comes in at 122.86. We have the low from 2012, which one comes in at 120.41. Not out of the question, folks. Is the low going back to 2010 at 118.76 a possibility as well? I'm not saying it's not. I'm not saying it's not. But what you have to remember is when the market was down here at 118.86 down here, look at the move that was going down through here. This was the Greek debt crisis, and everyone had the euro going to parity. It's going to parity. What do? We rallied all the way back up to 149. So markets are fickle. Markets change around. Markets win changes and all that other stuff. But comparing this to this or this to this is really nothing compared to this. So there's room to roam here, folks, if the market really wants to roam, okay? So understand that, and perhaps it might be the best thing that Mario Draghi can hope for is a lower euro, especially with the U.S. economy doing pretty good itself. So be aware of that. Bias remains to the downside. My name is Greg Michalowski. If you like this video, click on the like button, all right, in your YouTube. Click on the like button. If you want to put a comment there, put a comment. And make sure also that you subscribe to our YouTube channel by clicking this red button right here. And also for your daily market commentary in the foreign exchange market, visit us daily at forexlive.com. Good fortune with your trading. We'll see you at 8:30 tomorrow for some fireworks out of the EU. My name is Greg Michalowski. Bye-bye now.